The Austin real estate market has been white hot the last few months, with home prices soaring. Does that mean we're set up for a crash? Let's take a look and find out. Over the last year, many parts of our economy have seen fluctuation, but the housing market, both nationally and here in Austin, has remained strong. While the real estate market took an initial pause with the rest of the world at the beginning of the pandemic, the industry soon pivoted and responded to the changing landscape. Historically low interest rates and increasing customer demand led to historic figures nationally and here in Austin. Locally, we finished the year with over double-digit growth in the average home price to a now record $450,000 for the average home here in Austin. And importantly, we cut the number of days in half that homes are staying on the market. The start of 2021 has been even crazier. And with the spring market fast approaching, which is typically the busiest time of year for real estate, many are asking, will the good times keep rolling? If you're a buyer, should you consider jumping into the market and risk buying at the top? If you're a homeowner, should you consider selling and taking advantage of these historically high prices? Let's take a look at some of the data and see what we can find out. Anyone with real estate market concerns about home prices declining will inevitably draw parallels to the 2008 mortgage crisis. This is completely understandable since 2008 was our most recent economic downturn. However, the conditions now versus 2008 are quite a bit different. In 2008, the mortgage crisis was the primary driver of the economic downturn. This snowballed to create more economic hardship and more foreclosures, thereby driving down home prices. This past year, the real estate market has actually been a bright spot in the economy. This is in line with historical patterns, as home prices traditionally hold steady during economic recessions. Other key differences between now and 2008 are the fact that financial institutions are requiring more down payment and have stricter underwriting guidelines for those people looking to purchase homes. This means that the average homeowner has much more equity in their home, and so is much less likely to ever need to go into foreclosure should they lose their job. Another key factor is the work at home initiatives many companies have put into place. This has placed a premium on having a space where you can live and work comfortably, which has put increased demand for homes. This is quite different than in 2008, where demand started to plummet as concerns around the economy grew. While we don't see many parallels to 2008, could the rapid increase in home prices mean that we're in the midst of a housing bubble? A real estate bubble can occur when there is a rapid and unjustifiable increase in home prices, usually due to speculation from investors. In these cases, there can be a sharp drop in home values when investors exit the market to minimize losses or to take advantage of opportunities elsewhere. Contrast that with current market conditions where rising real estate prices are due to more historical factors, the two largest being historically low interest rates and low inventory levels. The historically low interest rates allow buyers greater purchase power, as well as adding more buyers to the market because they see real estate as a good investment. The scarcity of homes is also driving prices up, as the limited supply cannot meet the increased demand, thereby increasing prices. We hope to see supply levels return more to normal through the latter part of 2021 as the economy and conditions return to pre-pandemic levels. This should allow more people to be comfortable with the thought of putting their home on the market and selling. While economists believe that most of the country will see slower growth in 2021 than the previous year, Austin appears to be an exception as we look to match or even exceed our 2020 numbers. Overall, most indicators have shown overwhelmingly positive signs for the real estate market throughout the rest of 2021 and beyond. Pent-up demand and consumer-driven policies, along with the historically low interest rates, should see homeowners continue to build equity for the foreseeable future. Additionally, the increase in many long-term work-from-home policies should see a boost to the real estate market both now and for years to come. Have questions how these trends affect you and your home? Reach out and we'd be happy to discuss your unique situation and put together a plan to help you reach your real estate goals.